Good afternoon, Scott Riley, the market update desk. It's October 9th, day before my knee surgery. Hope you're having a great afternoon. NMLS number 157524. Wanted to do a brief overview of what's going on for today. We had the Fed's commentary from their September 18th meeting be released today. We've got a lot of things happening in the stock market. One of the things I was paying close attention to this morning was the Department of Justice and Google. So, Department of Justice has been going after Google, and potentially, depending on how this challenge or lawsuit from Department of Justice goes against Google, it could mean multiple things: a breakup of the company, a segregation of their different companies, the AI, the search engine, the advertising. This is a pretty big deal that's going on. And Google is smack dab in the crosshairs of the DOJ. Now, if you remember back a number of years ago, Meta, the parent company of Facebook, was embroiled with a lawsuit for the better part of 15 years with the Department of Justice. So the things going on is could Google fight this? Could they settle? One of the interesting takes that I got from hearing different things was, if Google fights it and loses, they or depending even on some settlement terms, they could be banned from doing some lines of businesses for a specific number of years. One of those things could be AI engineering and implementation. That would be a very big part of the futurescape of what Google is looking for. So very interesting things there. Now, the Fed released their notes today from their meeting. A couple excerpts from that. Now, we did notice that all of the participants agreed that it was appropriate for the Fed to ease monetary policy, and that they judged it appropriate to continue the process of reducing the Fed funds rate. They did note, if the economy evolved as expected, they would appropriately move to a more neutral policy stance. Most of the members saw policy as restrictive, but they disagreed on the degree of what that restrictiveness was. So those are very interesting things. When we looked at it, there was definitely disagreement. As we know, Michelle Bowman was the only dissenting vote on the 50 basis points. But within the meeting, there was, I guess you'd call it a hot discussion of whether it's a quarter or a half. Some of the members could have been swayed either way, but in the end, all but one voted for the 50 basis point cut. So we definitely have differences of opinion within the cliques of the Fed Reserve. So it's going to be interesting to watch how this next meeting in November, just a couple days before the election, turns out. Now, we have definitely swung in the market in the Fed futures expectation. For a while, it was thinking another half point change. The likelihood now is, I think it's a 65% chance or so of a quarter point cut. So what turned everything on a dime is, we've talked about it, the BLS jobs report and how strong that was up and down the report. Also, we see the 10-year moving and staying above its close from the previous day for the last 4 or 5 trading cycles. So we're sitting at about 4.05, I think, 4.06 right now on the 10-year. Now, will we see some traders kind of say, hey, we're going to take some profit off the table and form a new top line level of resistance? That's yet to be seen. So there are definitely movements in the background from traders, from market expectations on what's going to happen with the 10-year and what's going to happen with mortgage rates. Mortgage-backed securities, they keep hitting resistance, and we potentially, now I'm going to go back on some notes here, have hit a new resistance level. If we can hold that, it would be very nice to see. So mortgage bonds they started to trade sideways the last few days, and it's been a pretty big wide range of overhead resistance at the 50-day moving average and nearby support at 100.18. They look like they're trying to form what we talked about, a base, which would be very good to create a footing. Now, it's going to be really important is the 10-year auction later today, I think at 2 o'clock, and also tomorrow's CPI report. If we can get some friendly numbers from both that auction and the CPI, which we think will get friendly numbers on both the headline and core CPI tomorrow, we could create a new top level of resistance and start to come down a little bit. That'd be a welcome sight. We won't have an update. We may try to get a morning update tomorrow. Just found out my surgeries we have to be there at 8, so surgery about 8:30. Don't think I'll get those numbers out tomorrow. But you can go to CNBC, get a summary of what those CPI numbers are. We're thinking they're going to be better, so our expectation for tomorrow is a little bit better. There were a couple more Fed members today out there, and they were talking about why they voted for the 50 basis point and why it was needed, and that going forward may not be as big of declines in the Fed rate as what they expected just a month ago. Hope you find this helpful. The Market Update Desk with Scott Riley, your original singular market news source for the West Michigan area. 616-293-2189. Take care.